His clients. Morning, everybody. It is the 15th of April. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
Everything all right?
Yes, lovely day out there today.
Not concerned about what you saw yesterday evening? We're just going to brush that?
No, you know what? I wasn't. I was, in a way, I was a little bit relieved, so I don't have to go through the stress of watching them during the week now as much. But yeah, I mean, it was. I didn't really watch the first half. Watched a little bit the second half. But it was. I think they sort of got sort of hammered in the first game. So tough. Hello, Tina.
Sorry.
Tina,
I'll be watching the Arsenal match like that tonight.
Yeah, you will. Yeah.
What's that?
He's going to be watching Arsenal tonight. But we're live, darling, on Talking Bull. What would you like to say?
Sorry.
Maybe my wife can pick.
Sorry about the language.
Maybe my wife can pick a gun to the head trade better than I can at the moment.
I think both of us. Okay, so let's get stuck in then. So, watershed moment yesterday on the cryptocurrency front with the listing of Coinbase. The exchange will provide investors with a new avenue to access the rise of Bitcoin and other cryptocurrencies. The company's valuation soared over the 100 billion mark, which dwarfed that of the exchange operators providing the venue for its listing. It did slip back. I think it was down about 12% from over 20% lower than where it actually listed. So I don't think that's a surprise, really.
Where did it list? Around 250, did you say?
Opening price $381.
Ah, right.
I got up to that. 430. I mean, it's these things are, particularly with IPOs, are so hyped, aren't they?
Yeah.
They're often sort of a bit damp when they come to the market. And the sort of dust settles, but I'm sure it'll find its footing at some point and provide plenty of opportunities for people to trade that over the coming years. What else is going on? We saw proposed action potentially from the US with Russia, talking about taking or putting in place sanctions. They're hoping to have a summit between Biden and Putin at some point. We'll have to wait and see how that develops. I don't see Biden being particularly, inflammatory towards the Russians. So we'll wait and see. In terms of earnings, there was a pretty strong start yesterday from the US big banks coming in ahead of expectations. We've got Citigroup and Bank of America following that up today. So we'll wait and see what happens there. I think the tech sector was dragged lower ultimately by the Coinbase offering. So we can come on to that shortly. In fact, Steve, there's not much else to say really on the news front. I mean, there's more going on with the vaccine side of things, but we're all pretty bored of that. So take it away with the charts.
Lovely, thanks, Joe. The main thing yesterday for me, the one that really caught my eye was oil. We had US crude stockpiles fall as refiners ramp up output. And oil was interesting, as we spoke about yesterday, because we talked about the break on the short-term chart of this triangle formation. And we were trading around here yesterday when I was doing a little video on it. I said, if it came back to here, this would be a retest of the break of the trend line would be an ideal time to buy. However, obviously the oil inventories came out and boom, stockpiles falling and leading to a ramp up in the price. So going the way we expected from the short term on oil, even dollar recovering slightly and strengthening slightly, couldn't hold it down. And again, it's sort of formed a little bit of a flag formation potentially there. So maybe potential for a bit more of an uplift. The levels where we've talked about before, and we're watching. We got back into. Could potentially retest the bottom of this channel, or even eventually the $68 level, which we hit in March, early March, end of Feb, early March. So yeah, very positive on that side of things. On the gold front, we're just bubbling below the 1756 level, which I think could lead to a bit of an extended move higher. A gun to head challenge yesterday, I was buying it. Said I would rather buy a dip down obviously it's shuffled down there, stopped me out, took my money, and it's now back to where it was, close to where it was yesterday when we were talking about it. But obviously on the maybe the 4-hour time frame, we can see that it's a little bit of a potential flag pattern here, and that could lead to a move up, maybe back towards the first target would be the 50% retracement level of the complete down move at 1808. So $1,800 will be a psychological level, and somewhere to look for. But I'll obviously have to get a clear break first and the clear close above the 1755 to 57 level. On the downside, if we fail to do that, it's probably better to look at the daily chart. If we fail to do that, then a break of the 1720 level would lead to a flush out and maybe a retest of 1700, potentially even a retest of 1677. So there's the sort of two-way view on that. Looking at indices, we've got FTSE, yearly highs, poking our head above it at the moment, 69.66, good potential. 7,000 obviously be a psychological resistance, but I don't think it will hold it for too long. We've got this upward trending resistance that comes in on the weekly chart at 71.60, and 70.60 is a 78.6% fib retracement level, so that'll be a decent area to target. We can see this congestion from previous trading ranges, so yeah, we'll be finding resistance up here. It just feels like a bit of a grind higher, as we've been seeing. We've got this expanding wedge formation, interesting in DAX, but we've broken above it. Normally you get sort of a break above that, doesn't hang around for too many days, so I think, you know, probably a little bit overdone on the upside. Well, I know everything's overdone on the upside in indices, but we'll probably see some bearish divergence. As we can see here, we've got the momentum of the upward move going lower while prices are moving higher. So although we're breaking to the highs, I think I'd be, from a trading perspective, looking for really a retracement of some sort of indicator, so telling me that we're running out of steam, which is the MACD, and for me but it's forming a bullish flag, so don't get too loved up to anything. I think if we break above the flag, there's potential for a further extension higher. That'll be a real strong rally. However, I'd be more cautious on the downside, and really if we get a break below 15,150 or 147.5 is the exact level on this chart, but 15,150 would be a nice level. If we could break below there, then there is a bit of a vacuum of support all the way down to 14,800. So really that's the area to be aware of. If you're long, be careful of a break of that level. If it does start to sort of like push higher, then sort of like stick with it. It's you know, just and move your stops up to just below this level. That looks pretty cool to me. Dow Jones New Highs by any chance? Yeah, funny enough. So again, we're sort of facing upward trending resistance, which isn't the greatest resistance, but it is something to consider. Coming in today on the 4-hour chart, this is around about 34,000. Other levels to watch on here. I mean, we're still sort of, what does this go back to? Oh, it doesn't go back very far on this weekly chart. It's pretty poor, but all-time highs we are, and you can see how parabolic this move has been. Obviously, again, we're getting this MACD moving lower while prices are moving higher, so that's bearish divergence. So again, the real opportunity for me, unless you're invested and just want to sort of like run out this grind higher, think about the sort of like a real reversal signal, a hanging man candle, shooting star candle on a weekly, something like that will sort of like lead to, you know, even a correction doesn't mean the upward trend is not stalling. It could be just a correction within the upward trend. So I'm not, you know, it wouldn't be a reversal in trend. It'd just be a correction. So that's all we can see. So yeah, that's pretty much about it, Joe. You can sort
Thanks,
of
Steve.
take over the FX.
Nice. Okay, so again, all about dollar index. So that continued to sell off yesterday, as you can see there on the chart. This sort of down leg has been quite severe, and it's into this sort of band of support which we've highlighted on the chart. So maybe we'll start to see some evidence of buyers returning, but certainly the very short-term trend is quite bearish. So we have to wait and see what's going to happen here. And obviously, this has had a negative or knock-on impact to other pairs. If we take a look at euro dollar first up, as you can see, we've got the move higher with the dollar weakness and euro strength, and we're into this resistance level here at 119.92. Again, a bit of a challenge for that today. If we can get above that, then the hopes of a recovery or maybe a continuation lower in the US dollar will maybe occur. If we look at some of the riskier assets like Aussie dollar and New Zealand dollar, they both had pretty good days yesterday as people sort of run back to riskier assets. So this is the head and shoulders top pattern that I've been talking about for, well, feels like ages now. But yesterday we saw quite a large impulsive move to the upside, breaking through that resistance at 0.7699. So it's invalidated my trade that I had on there. The volumes have been declining in general. So, have we invalidated this? Often you can get complicated patterns that don't play out exactly as you think they will. So I think there is still potential for this to roll over to the downside. But in the short term, we could see a move up to test this right shoulder that we've got drawn on here up at 78.45. So the momentum in the very short term is bullish, and I guess it all depends on what happens with the dollar index now. Is it going to find support at that level that we mentioned, or is it going to continue lower? And if it does, then obviously we've got a very good chance of this pushing to the upside in the short term. If we take a look at New Zealand dollar, US dollar, what I was hoping would play out to be a bit of a flag formation here hasn't happened, and we've broken up quite convincingly again. Really big impulsive move to the upside yesterday, and that's continuing again this morning. In terms of where we can expect that to get to, we've got some resistance up here at 72.69. So again, potential for it to grind higher. We need to wait and see what happens with dollar index. If the buyers do return, then we may see this stall somewhere around here before a continuation lower. Overall, I think I'm still bearish of this, given that we've seen the break of this wedge. Maybe what we're just seeing is a consolidation and more sideways and choppy price action. So it's going to be difficult to trade. I was hoping for a break of that flag to start initiating shorts on that, but hasn't happened yet. So we've just got to have more patience on that for now. Aussie yen is another interesting one. Yen weakness has been pretty dramatic. We've got what I thought was the beginnings of a head and shoulders top pattern, but we're coming quite close to invalidating that now, given the strength that we saw yesterday and the continuation of that strength today. If we get above that level at what we've got, 84.46, then that will probably invalidate that pattern and we can forget about that. So I'm just going to take it off now in anticipation of that occurring, and we'll revisit that if we start to see some more evidence of that turning. But what we are seeing is sideways and choppy price action, so that may continue, and while it does, it's going to mean that trading opportunities are going to be very difficult within that market in the short term. Look at cable. That's continuing to trade within this sort of corrective wedge that's formed, having broken out of this channel. So again, more sideways choppy price action there, meaning that it's going to be quite difficult to find opportunities. And if we take a look at dollar yen, which I was interested in yesterday, that was my gun to the head idea. We've got this retest of this trend line here, having broken out back here on the 26th of March. We're now seeing a retest. It didn't hold yesterday as well as I thought it would. I'm not, giving up on that just yet, but again, it is all dependent on what goes on with this dollar index over the coming hours and days. So just a waiting and a watching for now. If we take a look at dollar CAD, this is one that I've got on the radar, waiting for a bit of a break of this wedge. We've been in this wedge pattern since March last year. I thought that we might be seeing some sort of bottoming formation taking shape here. It hasn't emerged yet. In order for me to flip sides on this one, to turn bullish, I need to see a break of this 126.47 level, and that hasn't happened yet. So while that's the case, it is still a situation of selling into rallies for now. That pretty much wraps it up for me on the FX front. So Steve, I'll go straight into the gun to the head trades from yesterday. As I alluded to a moment ago, I was long of dollar yen, and that didn't work out for me. This was the trade. So I didn't get stopped out, but we just saw choppiness within this sort of setup here. So nothing good came of that. I think it was down 0.3R on that yesterday.
Okay.
And you were stopped out on gold, is that right?
That's right. Yeah.
Okay, so more red, unfortunately. Has Tina got any good ideas for us today, or are you going to have another go?
Yeah, she's going off to buy some chairs, I think, this morning. So I was going to look at lumber.
Lumber, yeah.
Yeah, but I might sort of like, obviously she's driving, so maybe we'll have to call her copper, the way she speeds around. But yeah, maybe I'll look at copper. We're sort of like towards the top of this range, 14.16, 14.18, pretty decent performance over the last couple of days. We've sort of broken out of this level here. So it's either, do we sort of like continue with it? It feels pretty good. Let's go for it. Let's start think, well, the copper's a bit busy at the moment, so they won't be interested in Tina speeding, will they? So let's go getting long at 415.87. We're sort of broken above this previous high. Let's go with the copper. Have a stop at 1411.87. So, and look to target a nice 4-to-1 risk reward, 427.87. Come on, copper. Don't know whether it'll do it today. Seems like a bit of a stretch for a day trade, but you never know.
No, you don't. Okay. I'm going to take a look at indices. They all look pretty good today. Quite robust, performing well. Obviously in a very good upward trend overall. This is the Nasdaq. It's not quite at all-time highs, whereas some of the other markets are. We've got FTSE is not up at all-time highs, but it is up at new highs. We've got DAX sort of in and around that area, and the CAC too. So I'm going to opt for Nasdaq today. Clearly very strong. As we can see, this is only an hourly chart, but it's just below these highs here. So I'm going to back it to make new highs at 14,150. It's currently trading at 13,889. I'm going to place a stop loss below these swingish lows here at 13,770. So just looking for 2.25R on that one today. Hopefully our luck changes, Steve.
Yeah, let's hope so, mate.
Okay, so what's going to drive markets today? Well, as we mentioned, we have got some earnings from some banks. We've got Citigroup and Bank of America numbers today. We've also got US retail sales. Actually, a trifecta of data today at 1:30. We've got US retail sales, Empire State Manufacturing Index, and initial jobless claims all out at 1:30 in the US. So that will be quite interesting to watch. Anything else? No, it looks like it's it. So yeah, all good. I think we can wrap it up there, Steve.
Brilliant. All right, mate.
Cool.
Well, have a good day, everyone.
Yeah, you too. And
Good luck
we'll be
trading.
back tomorrow.
Cheers.